Good afternoon, everyone, and welcome to the Daily Volatility Box Report for September 17th, 2019. We are TOSindicators.com, home of the Volatility Box. Before we look at today's report, we're going to start off with just a chart to tell you a little story and show you something from us. Before we dive into today's daily volatility box report, we're going to start off with just some charts and animations to get the story started. So let's for a second assume that we're looking at a widget market So let's for a second assume that we're looking at the widget market landscape, right? So this chart on the side, on the horizontal basis, represents 100% of the market share. And on the left-hand side, on the axes, we have different historical periods. So we'll look basically starting from a year all the way down to today in increments of 6 months, 3 months, and then now to today. And the bottom, we have 0 to 100% representing essentially the max market share that a company, or in this case, three separate companies can have. We'll say company A, company B, and company C. So starting off with a year to go, we see that company A is essentially starting to so some context. So company A is the really old company that's been there for a while and it's starting to die off. Company B is sort of that new company in town, the new sheriff in town, if you will, and they've been stealing market share for quite some time from company A, right? And so as time goes on, we see, so it's 6 months, that now company B all of a sudden has new competition. It's conquered much more of the market share, almost 90%, as we see right here. But there's now a new entrance, so that's company C, which has just 10% of the market share 6 months out, and company A now has completely disappeared. Right, so we see this shift essentially in balance. So company B is now very clearly in charge. Company A is gone, and company C is starting to come into the picture. Now, as time starts to continue forward, what we see is that company C is gaining on company B, right? So it's slowly starting to eat away at some of its market share. And now, if we look at, say, today, we see that company B and company C are almost even. They're almost at 50%, and in fact, company C has taken over the market share and is even greater than 50%, while company B is decreasing. So now, if you were to try and say make a prediction on what do you expect is going to happen in the future, which company are you going to bet on, company B or company C? What would your answer be? I would imagine your answer would be similar to mine, which is if I had to bet on one, I would bet on company C, but really it's anyone's game at this moment because we're really right at 50-50. So no one really, we don't have any sort of bias versus say right here, if we had asked you with the 6 months chart, you would have said, hey, I bet on company B. Well, at least most of you would have said that. Now, if we take the same chart, but instead we just change the axes. So really, this is a chart with the FOMC rates, or at least the expectations, plotted here, right? And so in the yellow is essentially what we expected, at least up till today, which was we expected a cut, or more traders than not expected a cut. And today what we saw is we ended up shifting over to where now I think more traders expected no cut versus a cut, at least last we checked, right? And this is from going a month out all the way up till today. And hopefully, so I know like the idea of basis points, rate cuts, what does a rate cut mean? What is the point of reference? All of this is a little bit confusing or intimidating for some traders. But if you boil it down to a story where we're looking at it from a perspective, we're looking at it from a reaction, at least in the market, of what people expect. And people's expectations have gradually been changing over the course of at least the past month. Now, if you have to say, well, what do we expect? This kind of gives you an idea of, well, tomorrow, like, we don't really know what to expect, to be honest. Some traders are expecting, I think now if you were to use just more than 50%, and we pull up the actual CME chart. Okay, so looking at the real-time numbers, we see that we're basically hovering right at 50-50. And so tomorrow, to me, what I'll be looking at least for signs of, is on the bonds. I'll be checking to see if the bonds have any sort of clarity, if these numbers have updated to shift any sort of expectations, and look to play the moves that way. The volatility box will tell us, at least on the indices, what we should sort of expect given the morning's activity. But I think the bonds will be the more interesting one. I'd like to see if we stay contained inside of the aggressive box, or we essentially ping-ponging between each one of the edges, telling us that we should expect increased volatility throughout the course of the day. That'll be the story to tell. But hopefully giving you that idea of going from, say, looking at it from a market share perspective to just the same charts, different numbers, it starts to give you a better idea of how you should look at this. Most people focus on just the current numbers, and I think the story, the historical numbers, the numbers plotted right down here on this table, and you can also see it right here in the historicals, are far more interesting and tell you a more comprehensive story. Okay, and now moving on to actually our report for today. We had 3 trades that set up in the bonds markets. 2 out of the 3 were winners for a total net win of 218.75. So nothing to write home about, but we still ended the day positive, but still negative on the week so far. Let's take a look at charts. Okay, so here we have a chart of the 30-year bonds plotted, and we're on the aggressive volatility box. We'll draw our entry line, and we check to see whether or not we breached either side's aggressive entry lines. We see here that we very clearly did right here at the end of the hour, but what we also noticed is we ended up bouncing in the opposite direction with an equal move of what would have been originally our stop and our T1, letting us know that, hey, the volatility box was at least giving us our first targets. So that was our sign to continue to use the aggressive volatility box for the rest of the day until told otherwise. Our next entry in the bonds was an opportunity to get long right here. Our stop was outside of the volatility box where we gave it 8 ticks of room. Our first target was the 8 ticks. Second target was 10 ticks, both of which were hit for a T1 and a T2. As we ended up hitting our 2 targets, that was then our second opportunity to get short the bonds markets, and our order got filled because it was before that 55 candle, actually in the same candle in which we hit our targets. Our stop was outside of the volatility box, the same 8 ticks, and we unfortunately were taken out here for both of our contracts. And so the second trade was a loser. As the second trade was a loser and we saw price start to exceed the volatility box, that was our sign to then switch on over to the conservative volatility box for the rest of the day. Using the conservative volatility box, and luckily for our rules that helped us make this trade a winner, we had our final opportunity to get short the bonds right here. With a target, our stop rather, was outside of the volatility box. We gave it 5 ticks of room, and our first target was the 5 ticks, which was hit in this very candle in itself. Our second target was not actually hit because our second contract rather was taken out at a break even after our first target had been hit. And so in the bonds, we had our first trade hit T1 and T2. Our second trade was a bust on both contracts, and our third trade gave us a T1. And that was it for today's activity. Most of the indices were fairly muted, so if we just take a quick look, until the end, we essentially just chopped sideways for the most part, and we were on the aggressive volatility box on it today to make sure we're on the right box. But even then, we essentially just chopped sideways, no real edges at all. Looks like we're just waiting to see what tomorrow's action is. I do think it's interesting, however, that in the indice markets, we ended up chopping sideways, but the bonds, we had to switch on over to the conservative volatility box for crying out loud. So I think that's an interesting sign, or at least a telltale sign. Anyways, to wrap this video up, so tomorrow I wouldn't really be too surprised if we ended up having no adjustments in our rate at all. And this ended up being the option that wins. Just looking at it from a different perspective outside of what I think we've been expecting to happen for the past month, what we've been hearing about in the media, rate cut, versus what the actual numbers are telling us, and to me, what the trend is telling us. Again, that's just a perspective. I'll be looking at the bonds both in tonight's after hours activity along with tomorrow morning to see if we have any sort of prediction sign or predictor signs rather, as well as checking that CME watch tool to see if it updates. All right, take care everyone. We'll see you in tomorrow's volatility box report. Have a good night.